Welcome back to Investment Fund Secrets. I'm Pennington, and today I want to talk about how to execute a capital call effectively for your fund. All right, so this week has been a little crazy. Tonight is late. I don't know if you can tell, my eyes are bloodshot right now as I'm recording this. It's been a long day. We're trying to get ready for this weekend. We have a big deal coming through, a new clientele, I guess you could call them, of people that we're issuing loans to and doing debt financing for. And we're going to start doing a lot more of these. So we're trying to get our contracts in place. We'll probably move, $500,000 to $1 million in the next 6 weeks into these types of loans. So I'm trying to, right now, and I treat this podcast a little bit as my journal of how we're moving and trying to get things set up. And so something interesting I've been trying to deal with right now is with capital calls. And I want to talk to you today about that, about what a capital call is, how to execute that correctly, and what to do. So for those of you who don't know, a capital call in a typical fund, what you'll do, let's say you have a $100 million real estate fund. A capital call will be, you have a $100 million fund, but usually you don't have that just sitting in your bank account. What you'll do is you'll talk to investors and you'll say, hey, Mrs. Investor, and she wants to put in $10 million. You say, great. You have now committed $10 million that we can call upon anytime we want to use. So if you have a deal coming around the corner and we'll just use round numbers, it's a $5 million deal, right? And she has $10 million committed of your $100 million fund, or 10%. She has 10% pro rata of your fund. So on a $5 million deal, you would call her up. Hi, Mrs. Investor, send her an email and say, hey, we're going to call 10% of the fund right now to start doing deals. So from her, you would call $500,000, and then you've got 20 other investors, and you would call 10% of their capital commitments into your fund. That's called a capital call. And your investor is, by contract, able to meet their capital call. You do this on purpose to, first off, so you're not liable for their money. It's way safer to have the money in their bank accounts, right? Because day one, you're not going to be able to deploy $100 million into real estate projects, right? It's going to take a little bit of time. And then secondly, is you don't have to, we talked about this before about paying a pref and paying other things. You don't have to do that when on the full $100 million. You can do that just on the capital called. So if you call down, let's say it's $5 million, that $5 million, if you only use $5 million for the year, you actually do your IRR on just $5 million on the capital called. You wouldn't do it on $100 million. So you'd say, hey, we had $5 million this year and we turned it into $7 million. We had a great return this year, blah, blah, blah. But if it was $100 million and we turned that into $102 million, your IRR would go way down. With a capital call, though, a few things probably always go wrong for a lot of funds is your investors miss their capital commitments, right? So, hi, Mrs. Investor, we need to put you, $500,000 and we need it by this Friday. And we're going to close on the property next Tuesday. And people have their money tied up other places. They got to move it around. And sometimes your investors are going to miss capital calls. So in your LPA, your PPM, make sure to write in penalties for doing so. So I say, hey, if you miss a capital call, it's going to be a 2% penalty for doing so. And if you fail to meet that capital call within 20 days after, it's going to be another 2%, and so on. You can add all these terms and say, at that point, we're going to kick you out of the fund at a 4%, 6% penalty, and we get to keep that money. So there's all these different things you can do if they don't do that, because it is so crucial for you to get your money on time. For that example, if it's a Friday and you're closing on Tuesday, if she isn't sending her $500,000 and you can't close on a deal and you miss a deal because your investor didn't put in $500,000, but she promised she would, that is a huge deal for your fund, right? You missed it. All your other investors are mad at you now because you missed a deal and it wasn't even your fault, right? So it's good to time your capital commitments right. So anyways, with that example in mind, this week, I'm trying to plan out this weekend. We're probably going to need $40,000. It could be $200,000 this weekend. I don't really know. I've got to call my investors and figure out how much money we need for this weekend, because I don't want to be sitting on extra capital for the next couple of weeks. And this is a brand new deal to us. So right now I've been debating what to do. How am I going to call my investors, and how much money do I want to pull? They're happy to give me money. I just don't know how much I want to pull from the fund, because I don't want to be sitting on $200,000 when I only use $20,000 of it, and vice versa. I don't want to have $200,000 of loans to do and I only have $20,000 in the bank account. So right now I've been running the numbers and trying to figure out exactly what's best. But when you're running your fund, that's something to always think about in mind, is staying ahead of deal closings, especially for real estate, right? You've usually got hard close date. You need the money by X date. Be aware of your investors, your LPA saying, hey, when I do a capital call, you've got 7 days or 4 days to complete that. And if you don't, I don't care. You could be busy. You could be in the Bahamas. You could be somewhere. I don't care where you're at. If you don't complete that, there's going to be a penalty, because it's so crucial for you to complete deals and not miss deals for your fund. And it's not fair to the other investors. So that is what a capital call is, capital commitments, and how you should deal with your investors. That's something I'm dealing with right now. Probably next week I'll give you an update on how this weekend goes, but I've talked to a few investors. We just doubled our fund size last week from our investors, and we've deployed all that money already. So we're gonna have to add a lot more money these next couple of weeks and just keep growing and growing and growing. And still small potatoes. I haven't hit that $100 million fund size yet, but we are growing like crazy. And I want to document the whole journey with you on this podcast and this show, because I want you to see how it is from the ground up and see the problems that you'll face at the beginning, because it's hard when you see people on the top of the mountain and they're like, oh, it was so great getting here. It was so beautiful and it's so pretty on top, but you don't see the mud and the blood and the tears of how they struggled for years through navigating these little things to get to the top. And I want to take you through that. That's today's episode. See you guys in the next one. Bye.